today I'd like to discuss the nature and role of accounting in our accounting theory course. Before we begin, let me introduce myself. My name is Meri Anggraini, student ID 2341 from the Management 23D class. Definition: Essence of accounting. Accounting is essentially a systematic process that involves recording, classifying, summarizing, presenting, and interpreting financial transactions in monetary units related to economic activities. Furthermore, accounting is also understood as a financial information system that collects and processes data into information useful to relevant parties, primarily to support decision making. According to the American Institute of Certified Public Accountants, accounting emphasizes technical activities such as recording and reporting transactions, whereas the American Accounting Association highlights the role of accounting in providing economic information. These two perspectives complement each other in comprehensively explaining the essence of accounting. The purpose of accounting theory. In general, accounting theory serves as a foundation for understanding and implementing accounting practice in a more focused manner. This theory helps explain the rationale behind the use of specific accounting methods, while also enabling prediction about future practice. Additionally, accounting theory supports decision-making for managers, investors, and auditors because the information it generates is more structured and reliable. The theory also clarifies the relationship between accounting principles, assumptions, and methods, thereby forming an integrated system. As a result, financial statements become more consistent, relevant, and easier to compare. On the other hand, accounting theory is also continuously developed through research to ensure it remains relevant to current needs and evolving times. Types of accounting theories. The first, fundamental analysis model. This theory is used to assess a company's value based on its financial condition, such as earnings, assets, and liabilities. Second, efficient market hypothesis. This theory states that stock price already reflect all available information. This means it is difficult for investors to generate excess returns because information is immediately incorporated into market price. 3. Capital asset pricing model. This theory explains the relationship between risk and rate of return, the higher the risk of an investment, the higher the expected returns. This model helps determine a reasonable rate of return. 4. Human information processing model. This theory examines how people understand and process accounting information. Its purpose is to determine whether the information is easy to understand and how it influences decision making. 5. Positive accounting theory. This theory explains real-world accounting practice, including the reason why companies choose certain methods. For example, companies choose accounting methods that can increase profits. And number 6, critical perspective model. This theory critiques accounting from a social perspective and in terms of specific interests. Its aims is to determine whether accounting is truly neutral or, on the contrary, benefits certain parties. The role of accounting. Number one is a management tool. Accounting helps collect and manage financial data, safeguard assets, and ensure that company activities align with plans. Number two is an information provider. Accounting presents financial data that is essential for decision making by manager, investor, and creditor. Three is a performance evaluation tool. Accounting is used to assess a company's performance, so as profit, cost efficiency, and target achievement. Number four, to help resolve conflicts. Accounting provides objective data that can serve as the basis for fair evaluation among parties. Number five, by maintaining transparency and integrity. Accounting plays a role in building and sustaining trust. Measurement in accounting. Measurement in accounting is the process of assigning numerical values to economic transactions or events based on specific rules or standards. Accounting not only records but also determines values and present information to users such as managers and investors. This process uses monetary units and is conducted objectively to ensure the results are reliable. To ensure the resulting figures are meaningful, measurement uses scales such as nominal, ordinal, and interval. The goal is to present financial data accurately, facilitate analysis, aid decision making, and produce clear financial reports. Generally accepted accounting principles. Definition: GAAP is a set of accounting rules and standards used as guidelines for preparing and presenting financial statements to ensure that the results are consistent and reliable. Purpose: the purpose of GAAP is to standard recording methods across companies, improve the accuracy and reliability of financial statements, facilitate comparison of financial statements between companies, and assist stakeholders in decision making. GAAP encompasses convention, rules, and procedures used in recording transactions and preparing financial statements. As a result, different countries may have varying accounting standards, making international standards necessary. The relationship between GAAP and IFRS is to unify global standards. International Financial Reporting Standard Definition: IFRS are international accounting standards used as guidelines for preparing corporate financial statements. These standards are developed by the International Accounting Standard Board. Purpose: IFRS aims to standard the presentation of financial statements worldwide, making them easier to compare, more transparent, and more reliable. This also helps to encourage international investment. Global adoption: IFRS has been adopted in many countries such as the European Union since 2005, Canada 2009, and Taiwan 2013, making it a globally recognized standard. IFRS in Indonesia, IFRS was adopted into the financial accounting standard by the Indonesia Institute of Accountants and began to be fully implemented around 2050. Relationship with GAAP. GAAP refers to the accounting standard applicable in each country. Many countries, including Indonesia, align their GAAP with IFRS to ensure compliance with international standards. Benefits: the implementation of IFRS makes financial statements more reliable, facilitate cross-country comparison of companies per investor, and enhance global market confidence. Conclusion: in general, Accounting plays a vital role in organization and business because it serves not only as a record-keeping function but also as an information system that helps identify, measure, and present financial data for decision-making. Accounting also serves as a management tool for planning, controlling, and evaluating performance so that companies can operate in a focused manner. Furthermore, the use of appropriate measurement helps clearly depict financial condition and facilitates analysis. In practice, accounting must adhere to standards such as GAAP and IFRS to ensure that financial statements are consistent, reliable, and comparable. Equally important, accounting demands honesty and transparency because the information produced is used by various parties. Alright, that's all the material we're covering. Thank you for watching this video. See you in the next video.